Friends in Real Estate Investment Trust. Wall Street, S&P 500 hit a new high on Friday. You'll be asking, hey, after that, Wall Street climbed a wall of worries and hit a new high. What would be and when will it be for S REITs to hit or challenge their new high? Now, what kind of wall of worries are there in front for S REITs to succumb and climb before they can challenge the new high? And then we will also talk about essentially how to position, what to position, and when to position in a big way for you to reap millions in real estate investment trust. But before that, ladies and gentlemen, show us a good subscribe button. Tell us your friends about GCP Global because we've been doing wonderful videos on real estate investment trust, the contemporary issues, the issues that grapple the REIT industry, as well as that affects certain REITs. Week in, week out. We do quality videos. Each video take up to about 10 hours. So do subscribe. Tell your friends about this and smash the like button. So, ladies and gentlemen, now that the Wall Street have hit a new high, what about S REITs? Now, this chart, ladies and gentlemen, shows you the last time when S REIT got smashed down. That was actually when the Federal Reserve increased interest rates throughout 2018 and culminated, as you see, on the 20th of December 2018. As you can see, essentially that down all the way as shown by the red arrows was actually down by 6 various times. So in all, the S-REIT market fell by 12 or 13%, over a period of 1.5 years. But look at the recovery, ladies and gentlemen, after the Fed stopped interest rate increases on 20th of December 2018, the S REIT just spiked. In fact, it went all the way straight up 14 months, but as you can see, it's just not all the way up. As you can see, it moved up and then it's shown by the pink arrow. And what I taught you last week, there's always pause in the rally, which actually asks and bring up the skeptics, again and again that, oh, okay, the rally will not be there. But if you do follow us, we have been telling you that, hey, it's just a pause in a bull rally. And it actually gives you the time and the essence to feel the pulse, as in P-U-L-S-E. So when the market pause, P-A-U-S-E, it gives you the chance to sense the pulse in the market. And that's what we do in GCP Global quarterly reinvestment classes. We actually help you to actually feel the pulse of the market, to actually decide from the heart beating which are the REITs that will be well positioned for the next uplift. So now, this is where Wall Street is. As of Friday, you can see that we have and the closing at 4839 has challenged and superseded the last high, which was achieved on 3rd of January 2 years ago when the level was at 4796. Hooray! But well, when do we get the hooray for S REITs? Now, look no deeper, ladies and gentlemen. In my various interviews, in Channel News Asia, the first one that's on the top, you can see, as well as the one that's below, Business Times podcast, which was only broadcast 2 months ago in November. I've already said that the market for S REITs have already bottomed in October of last year. To be exact, it was 26th of October, just a couple of days after my live interviews. And you can see that the S REIT market has bounced back. But where are we really rightly? So if I may just show you the similar chart for the Wall Street. Now, just to bring back, this is the 5-year chart of the S REITs, the IH S REIT index. You can see that from the 19th of February 2020 all the way down to 23rd of March. You can see of 2020 because of the pandemic crisis, the S REIT market crashed a woeful 38% in just 1.5 months. And then it recovered, as you can see from the blue line, but the recovery actually fell short of hitting the 1,200 index. And then again, when the Federal Reserve increased interest rates, as you can see, from 17th of March 2022, that resulted in an overall drop of 30%, in the last 21 months. And for those who have followed us in our videos, as well as attended our GCP Global investment classes, we told you, hey, time to relax, time to lighten on the real estate investment trust before they went down. And right now, as they are moving up, and the bottom was seen, on 26th October, as you can see from the tip of the red arrow, and now we are asking, from the green button, as you can see, if and when, followed by the two question marks, when the S REIT market will actually go up and challenge the new high. Now, let me show you some of the best performance of the real estate investment trust. Cheers, man. Yes, ladies and gentlemen, since the beginning of the year, from the mini peak that we saw at the end of the year, most of the REITs have actually fallen by 4, 5 to 7% thereabouts. But you notice that one of them, that's AIMS APAC from the first table, actually went up 1 cent. And you can see, ladies and gentlemen, this is our lunch with AIMS APAC CEO Mr. Russell Ng on Thursday, 4th of January, just 2 weeks ago, at none other than Art de Danel Spirindo at the Singapore galleries. Now, you notice at GCP Global, we normally catch up the REITs, CEOs, and the management team very closely on a weekly basis to actually sift out the good deals, the good things that the REITs are actually doing, and share it at our GCP Global investment classes in detail. So if you're ready to find out more whether AIMS actually will become a Michelin star restaurant, because Art de Danel that we actually had lunch in is a Michelin star restaurant. Do join us and sign up for our class. Our next upcoming class is on the 23rd of March in just 1.5 months' time. Now, looking at the next table, you can see that again, the others, the better REITs actually had a correction. But then again, two others stand out again from this table. ESR Logos, which was flat, and United Hampshire, which is actually up 3%. And ladies and gentlemen, yes, if you have been following us and if you have been a regular student of GCP Global, you notice you would have been invited for the dinner with United Hampshire CEO and management team. As you can see, the wonderful students and investors of GCP Global having a wonderful dinner with the CEO of United Hampshire. Yes, ladies and gentlemen, in the last 35 years of public teaching, we have amassed a wide group of very high net worth individual investors, family offices, and REIT index fund managers into our classes. And they find this kind of sessions with the CEOs, very, very invigorating. Not that you find about anything new, but actually is very good for confirming what they already believe in. And for this year, ladies and gentlemen, we definitely are going to have more of these functions, because the REIT market is not only just going to go up, pause, but help you through the pulse, but we actually give you a chance to actually understand how the blood flow within each of the REITs. And then this next chart shows you, ladies and gentlemen, our latest launch with none other than Mr. Adrian Chu, the CEO of ESR Logos, where we had our lunch just recently. And you notice, not surprisingly, the market has rewarded ESR Logos as what we have said previously, that they were brave enough to actually be one of the first REITs to sell off their portfolio of real estate investment trust, to lighten their gearing, bring it to management levels, and actually send a message to the market. Yes, the messages that REIT managers send to the market is very important, and that's why we actually watch with these REIT managers variously, and regularly on a weekly. the REITs you want to know that you want to be positioned in, and how much to position in, and when to position heavy into, because that's where you make your big money. You know, just this week again, I was interviewed on front page Business Times. You notice that essentially our prognosis for making money in REITs is very simple. Stay off toxic REITs, which basically are harmful for your portfolio, and position into those good, well-managed REITs before the REIT market actually what they say colloquially in Hokkien, "Chonga," so to speak. Right now, the market is having what we call a pause, but it gives you a chance to feel the pulse of the market. Don't be scared, honestly. So back to our front page Business Times interview. Now, guess what we say? Now, we say that essentially, just to quote, veteran REIT investor and chairman of GCP Global, Gabriel Yap, also sees the return of uh, lenders as a necessary step for US office REITs to become attractive. Right now, there's already some talk that US office REITs is possible to recover. But then again, in my interview, I'm just telling you that the pulse of the market is that right now you don't even have any lenders for some of the syndicated loans to be financed in the US. So how are you going to have a recovery? Remember this year, 2.9 trillion of real estate loans, including collateralized mortgage obligation, have to be refinanced in the US. Next year, 2.7 trillion. Yes, 2.9 trillion and 2.7 trillion. That's roughly 55% of real estate investment loans to be refinanced. Now, lenders have actually walked away the likes of Brookstone. So how can real estate market, particularly office market, recover this year or even possibly next year? If you are actually taking a position into the likes of Manulife, Prime, or Capital O, you're just taking a speculative position. Remember, in real estate investment trusts, don't play with your money. The first rule of investment is to reserve and watch your capital. And that's what we do in REITs. Now, remember in last week's video, we show you which are the dark REITs. Now, this week, you can see that it's clearly that as the consolidation and as REITs continue to take a pause, you know, surprisingly, within less than 3 weeks, some of these REITs can already suffer double-digit loss. So in order of the worst performing REITs since the end of the year, you can see prime rate is down 18%. Life is down 15%. Capital O is down 12%. Well, as what I said in my Business Times interview, a few cents of recovery does not even qualify for recovery, considering the huge amount of capital destruction they have done. And what are the other dots like Lipomos, Elite Commercial? They are down 12%, 7% respectively in just a course of just 3 weeks. Now, take a look at my this video, particularly on elite commercial REIT, where I already questioned whether investors are throwing good money after bad if they went for the rights issue, which closed this week on Wednesday. Now, take a look at the table on the right. You can see that immediately when the new REITs shares traded for Elite on Thursday, the volume is tremendously terrible. You don't even need to wait for a day to start losing money because, the rights issue was priced 27 cents, down 10 cents previously. But the first day of closing is already 26 and a half. And guess what? Yesterday, it's closed even at 26 and a half. Wow, it's the surest way of losing money, in not even one day. Can you just imagine it? And if you Friday's volume, if is something for you to extenuate further, you see not even like 100 lots is being done, meaning that if you have 1 million lots of elite to sell, it probably take you more than 10 days to sell if Friday's volume is any indication. So ladies and gentlemen, for those of you who I certainly hope you watch my video and you did not throw good money after bad on Elite Commercial. So once again, thank you for watching this week's video. Notice that, ladies and gentlemen, as we continue to feel the pulse and the pulse in the REIT market, you want to watch us closely. How much, as I said, to position into, how much and when to position in a big way. Do join us for our class on the 23rd of March. So till then and next week, the S-REIT market is definitely just pausing. Okay, it's on its neck, up neck. So do watch us closely. Tell Tell your friends about us, subscribe and enjoy our videos week in, week out.